Imagine waking up one morning with just 13,000 in your bank account, and within a few years turning that into over 150 million. Sounds like a fairy tale, doesn't it? But for one man it was reality. His name, Takashi Kotegawa, or as Japan calls him, BNF, the man who conquered the stock market from his tiny Tokyo apartment. Takashi Kotegawa's journey from an ordinary young man with only 13,000 to a multi-millionaire stock trader is one of the most remarkable financial success stories in modern Japan. His story begins not with privilege, connections, or formal financial education, but with curiosity, determination, and an extraordinary sense of discipline. Starting small and dreaming big, Kotegawa proved that success is not about how much you begin with, but how wisely you use what you have. His path illustrates that the foundation of great achievement often lies in humble beginnings, where the only real capital one possesses is belief, persistence, and the courage to take calculated risks. In the early 2000s, Japan's stock market was an uncertain and intimidating place. The economy was recovering from what many called the lost decade, and few individuals dared to invest in the turbulent and unpredictable environment. Yet, amidst the doubt and hesitation, a young Kotegawa saw potential. With his small savings of about 1.6 million yen, roughly 13,000, he began trading stocks from the confines of his modest apartment in Tokyo. There was no team, no fancy equipment, and no professional guidance, only a computer, an internet connection, and a burning determination to learn how the markets worked. Unlike many who are drawn to the stock market by dreams of quick riches, Kotegawa's approach was different from the start. He treated the market like a classroom, not a casino. Every trade, whether it resulted in profit or loss, became a lesson in understanding market psychology. He spent long hours analyzing charts, studying price patterns, and observing how traders reacted to news and rumors. His focus was on building knowledge, not chasing immediate wealth. This mindset, beginning small but thinking strategically, allowed him to develop a disciplined approach to trading that would later define his success. What makes Kotegawa's beginning truly inspiring is how he managed risk despite limited capital. Most novice traders fall into the trap of overconfidence, investing all they have into a single stock or taking impulsive decisions based on emotion. Kotegawa did the opposite. He learned to manage his emotions, especially fear and greed, which often destroy traders long before they lose their money. He took small positions, observed outcomes, and refined his strategy gradually. In doing so, he transformed what seemed like an insignificant amount of money into a valuable learning tool, a testing ground for his ideas and techniques. His story reveals that when you start small, you are forced to think carefully about every move, and that very caution can become your strength. Another key aspect of Kotegawa's early journey was his relentless commitment to self-improvement. Without mentors or formal education in finance, he relied on his own research and observation. He studied the movements of successful traders and analyzed historical data to understand how market cycles operated. He was patient, waiting for the right moment to act instead of chasing every market swing. This patience became one of his greatest assets, allowing him to identify opportunities that others overlooked or feared to touch. His early experiences taught him that trading success is not about being active all the time, but about being prepared when opportunity arrives. Kotegawa's story also challenges the misconception that large capital is a prerequisite for financial success. In a world where many believe that money makes more money, he demonstrated that mindset, knowledge, and discipline can be far more powerful. By starting with a small amount, he minimized the consequences of mistakes, allowing himself to learn without devastating losses. Over time, his confidence grew, not because of luck, but because of mastery. He understood the risks he was taking and made sure every decision was backed by logic, not emotion. This balance between ambition and caution became the essence of his philosophy. Perhaps the most remarkable part of Kotegawa's early years is that he never saw his small beginning as a disadvantage. Instead, he used it as motivation. The limitation of resources pushed him to be creative, to think critically, and to develop strategies that relied on intelligence rather than capital. He embodied the belief that success begins in the mind before it manifests in reality. His 13,000 was not just money. It was his seed investment in himself, in his ability to learn and grow. In essence, Takashi Kotegawa's beginning as a small-scale trader teaches us that greatness often starts with very little. His journey reminds us that what matters most is not the amount of money you start with, but the clarity of your vision, the patience in your process, and the resilience to keep learning when others give up. Starting small gave Kotegawa a unique advantage. It taught him humility, discipline, and the value of incremental progress. Through steady effort and relentless curiosity, he turned what many would see as a limitation into the foundation of one of Japan's most inspiring success stories. His life proves that dreaming big is not about chasing instant results. It is about nurturing potential, step by step, until persistence transforms the small into something extraordinary. Takashi Kotegawa's success in the stock market was not built on luck or blind optimism. It was the result of carefully calculated risk-taking. In the world of trading, risk is inevitable. Every decision carries the possibility of loss. What separates winners from losers is not the absence of risk, but the ability to measure, manage, and control it. Kotegawa mastered this art early in his career. Unlike many traders who relied on emotion or instinct, he approached the market with the precision of a scientist and the patience of a strategist. His understanding of risk became the foundation for his extraordinary returns, and his story demonstrates that taking risks is necessary, but only when they are informed, disciplined, and deliberate. From the very beginning, Kotegawa viewed risk as a tool rather than a threat. He knew that to grow his small capital of 13,000, he had to take chances, but those chances had to be intelligent. He never entered a trade without studying its background, analyzing price trends, and preparing for multiple outcomes. He believed in doing his homework meticulously, spending hours observing stock movements, learning from past market crashes, and understanding how human psychology drives buying and selling behavior. This deep analysis allowed him to recognize patterns that others missed. He didn't simply react to the market, he anticipated it. In this way, his risk-taking was not random, it was calculated. One of the most defining moments of Kotegawa's career came in 2005 during the J-Com incident, a trading error that shook Japan's stock exchange. A broker mistakenly placed an order to sell 610,000 shares of J-Com at 1 each, instead of selling one share at 610,000. Panic spread instantly across the market as prices collapsed. While most traders fled in fear, Kotegawa recognized an opportunity buried beneath the chaos. He understood that such a drastic price drop was an error, not a reflection of the company's actual value. Within seconds, he took the risk, buying large quantities of the undervalued shares. When the market corrected itself, Kotegawa earned millions from that single move. This event became a turning point in his career and a perfect example of calculated risk in action. A combination of quick thinking, sharp analysis, and immense courage. Kotegawa's approach teaches us an important distinction between taking risk and being reckless. Reckless traders jump into opportunities driven by greed or panic. Calculated traders, like Kotegawa, take time to understand every possible outcome before acting. He often said that the market rewards discipline and punishes emotion. For him, every trade was like a chess move, planned, deliberate, and based on logic rather than impulse. He was not afraid to take risks, but he made sure that the potential reward justified the potential loss. If a trade did not meet his strict standards of probability and payoff, he simply walked away. This patience was what made his risk-taking so effective. Another key element of Kotegawa's calculated risk-taking was risk management. He always set limits for himself. knowing when to stop trading, when to take profits, and when to cut losses. He never allowed a single mistake to destroy his portfolio. If a trade went wrong, he analyzed it, learned from it, and moved on. This ability to detach emotionally from losses allowed him to maintain a clear mind and make rational decisions. Many traders fail not because of a lack of skill, but because they cannot handle failure emotionally. Kotegawa understood that losing is part of the process, but what matters is how you manage those losses and prevent them from multiplying. His story also highlights how calculated risk taking is not only about technical skills, but also about psychological strength. To act decisively when others panic requires immense mental control. In times of market uncertainty, fear spreads faster than logic. Kotegawa's calmness under pressure gave him an edge. He knew that emotional decisions lead to errors, and he trained himself to remain composed even in moments of extreme volatility. This mental discipline, combined with his analytical mindset, allowed him to turn risky situations into profitable ones. Beyond trading, Kotegawa's philosophy of risk-taking carries a universal lesson. In life, as in the market, every opportunity involves uncertainty. Those who wait for perfect safety never move forward, while those who leap without thought often fall. The key is to take informed risks, to study, prepare, and then act with confidence. Kotegawa's success reminds us that the greatest rewards often come from moments of courage, but courage must be backed by calculation. In the end, Takashi Kotegawa's story is not just about making millions, it's about mastering the delicate balance between risk and reason. His ability to assess danger, stay disciplined, and act strategically transformed him from an ordinary man into a legendary investor. He showed that risk, when managed wisely, becomes the very force that drives success. Kotegawa's calculated approach serves as a timeless reminder that in any field, finance, career, or personal growth, the path to great returns always passes through the landscape of risk, and only those who plan their steps carefully can cross it safely. The defining moment in Takashi Kotegawa's trading career came during a time of chaos, the 2005 J-Com incident, a moment that tested his courage, discipline, and ability to think clearly when the entire market was losing control. This episode became the perfect example of how he could turn crisis into opportunity, transforming fear into fortune through his calm mindset and strategic decision-making. In a world where most investors panic in the face of uncertainty, Kotegawa stood out for his ability to remain composed, analyze situations objectively, and make bold yet informed moves. His success during this market disaster did not just bring him immense wealth. It solidified his reputation as one of Japan's most brilliant traders and illustrated the power of rational thinking in moments of collective fear. The story begins on December 8, 2005, when a trading error by Mizuho Securities caused unprecedented turmoil on the Tokyo Stock Exchange. The company mistakenly placed an order to sell 10,000 shares of a small recruitment firm called J-Com at 1 yen per share. Instead of selling one share at 10,000 yen, the result was chaos. Within minutes, J-Com stock price plummeted. Panic spread like wildfire as traders, unsure of what was happening, began to dump their holdings. To most, it looked like a disaster, a collapse that could wipe out anyone brave or foolish enough to intervene. But to Takashi Kotegawa, this was a rare and fleeting moment of opportunity. Kotegawa's experience and discipline told him that something about the crash was illogical. The fundamentals of J-Com had not changed. This was not a financial crisis or a corporate scandal. It was a human error. He recognized that when panic takes over, prices often lose touch with reality, and those who can see clearly amid confusion stand to gain the most. While others were retreating, he began buying. With nerves of steel and deep trust in his analysis, Kotegawa invested heavily, purchasing shares that everyone else was desperate to sell. It was a moment that required not only intelligence, but immense psychological strength. Within hours, the mistake was corrected. When the market realized that the drop had been caused by a simple typing error, J-Com stock price rebounded sharply. Kotegawa's bold decision to act while others froze resulted in an enormous profit, reportedly hundreds of millions of yen in a single day. This event became legendary in Japan's trading history and is still cited as one of the most impressive examples of crisis-based profit-making. But beyond the money, the lesson Kotegawa demonstrated was far greater, that the calm mind sees what the panicked mind cannot. What made Kotegawa's success so remarkable was not just his ability to predict what would happen, but his ability to stay rational under pressure. In the financial world, panic spreads quickly because human beings are emotional creatures. Fear and greed drive most decisions, often leading to costly mistakes. Kotegawa's training, patience, and focus allowed him to detach from the emotional chaos around him and focus solely on logic and data. His understanding of how psychology influences markets became his greatest weapon. He knew that when others are driven by emotion, there is always a gap between perception and reality, and within that gap lies opportunity. The J-Com incident also shows how Kotegawa's approach was rooted in risk management and timing. He did not recklessly invest everything he had. He assessed the situation carefully, calculated the potential downside, and ensured that even in the worst-case scenario, he could recover. His decision was bold, but it was never blind. This distinction between confidence and arrogance defines true mastery in any high-risk field. Kotegawa's willingness to take a well-measured leap when others froze turned what could have been a disaster into one of the most profitable trades in Japanese history. The event also shaped his reputation beyond the world of finance. It showed that opportunities are often hidden within moments of crisis, and that those who can think clearly while others panic are the ones who change their lives forever. Kotegawa's story mirrors a broader truth about success in life. Every crisis carries two possibilities: collapse or growth. Whether in business, academics, or personal challenges, our response to difficulty determines the outcome. The same storm that destroys some people can propel others forward, depending on their mindset and preparation. After the J-Com incident, Kotegawa became a symbol of the power of composure and strategic thinking. Yet, even after earning millions, he remained humble and focused, never letting success turn into recklessness. His calmness in crisis became a defining feature of his philosophy. He once said that the market rewards those who remain disciplined and punishes those who panic. His actions prove this truth beyond any doubt. In conclusion, the J-Com crisis serves as the perfect chapter in Takashi Kotegawa's story, a moment where risk met opportunity and where logic triumphed over fear. It was more than a financial victory. It was a demonstration of mental mastery, patience, and insight. Kotegawa's ability to turn a disaster into a triumph reminds us that every crisis, no matter how severe, contains within it a seed of possibility. The difference lies in perspective. While most see only danger, a few, like Kotegawa, see the hidden chance to rise. His story teaches us that calmness, knowledge, and courage can transform even the darkest moments into stepping stones toward greatness. One of the most admirable aspects of Takashi Kotegawa's life, beyond his trading genius, is his remarkable discipline and humility. Despite amassing an immense fortune through his success in the stock market, he chose to live a life of simplicity and restraint. In a world where wealth often changes people, driving them toward extravagance, arrogance, or impulsiveness, Kotegawa remained grounded. His ability to stay disciplined, both financially and emotionally, is what set him apart from other traders who rose quickly and fell just as fast. His story is a powerful reminder that discipline is not just about how we earn money, but also about how we manage ourselves after we earn it. After becoming one of Japan's most successful stock traders, Kotegawa could easily have adopted a lavish lifestyle. He could have bought luxury cars, mansions, or yachts, symbols of success that many in his position would chase without hesitation. Yet, he did none of that. Instead, he continued to live in his modest Tokyo apartment, ate simple meals, and avoided unnecessary spending. He even became known for his daily habit of eating instant noodles, despite being worth millions. This simplicity was not born from stinginess, but from principle. Kotegawa believed that once a person lets money control their desires, they lose the clarity and focus that helped them succeed in the first place. His humility was not an act. It was a way of preserving the discipline that made him who he was. Kotegawa's approach to wealth was deeply psychological. He understood that money has the power to influence emotions, creating greed, overconfidence, and complacency. Many traders who experienced early success in the market ended up losing everything because they could not control these emotions. Kotegawa refused to fall into that trap. He saw wealth not as a tool for indulgence, but as a resource that needed to be managed with the same discipline he used in trading. To him, every yen still held value, and every decision, no matter how small, required thought and self-control. His humility protected him from the emotional highs and lows that come with sudden success. This discipline also extended to his trading habits. Even after earning millions, Kotegawa did not abandon his careful, analytical approach. He continued to study the market daily, maintaining his routine of observing trends and reviewing data for hours. He did not rely on fame or instinct. He relied on preparation. His attitude toward trading was consistent. He treated every decision with respect, as if he was still that young man trading with only 13 zalozen. This mindset prevented him from becoming reckless and ensured that his success remained sustainable over time. His consistency shows that true discipline is not something you turn on and off. It is a lifestyle. Kotegawa's humility also reflected a deep understanding of the unpredictable nature of success. He knew that the market could be kind one day and cruel the next. No matter how skilled he became, he never believed he was invincible. This awareness kept his ego in check and his focus intact. In interviews, he rarely boasted about his achievements or gave grand speeches about his wealth. Instead, he spoke about the importance of learning, patience, and emotional balance. He saw success not as a final destination, but as an ongoing process that required constant self-awareness and adjustment. What makes Kotegawa's story so inspiring is how it connects financial discipline with personal integrity. His humility made him more than just a successful trader. It made him a role model for anyone pursuing ambition. In today's world, where people often equate success with luxury, Kotegawa's lifestyle sends a different message, that the true measure of wealth lies in freedom, not possessions. By controlling his desires, he maintained control over his time, his mind, and his peace. He did not need validation from material things because his satisfaction came from mastery of his craft and of himself. Furthermore, Kotegawa's discipline had a ripple effect on how people viewed him. To many young Japanese traders and investors, he became a symbol of how intelligence, restraint, and ethics could coexist with financial success. His story challenged the stereotype of the greedy trader and instead presented a picture of someone who valued balance over excess. He showed that wealth can be handled responsibly and that maintaining humility in the face of success is a sign of true wisdom. In essence, Takashi Kotegawa's discipline and humility form the moral backbone of his success story. While skill and timing made him rich, it was his character that kept him successful. His ability to live modestly, remain emotionally stable, and continue learning even after achieving immense wealth reveals a deeper kind of strength. The strength to stay grounded when life elevates you. In every sense, Kotegawa reminds us that discipline is not a restriction but a liberation. It protects you from the chaos that comes with success and keeps your vision clear. His life is proof that the greatest victories are not only won in the marketplace, but also within the mind. To remain humble when the world praises you, and disciplined when fortune smiles upon you, that is the true mark of success, and that is the lasting legacy of Takashi Kotegawa. The story of Takashi Kotegawa ultimately leads us to one profound truth: the perfect balance between risk and return. Throughout his journey, from starting small to mastering the markets, Kotegawa demonstrated that success is not about avoiding risk, nor is it about chasing it recklessly. It is about understanding the relationship between the two, the delicate equilibrium that separates long-term success from short-lived fortune. His life stands as a testament to the idea that great rewards are only possible when risks are approached with intelligence, discipline, and patience. In every trade, and indeed in every decision of his life, Kotegawa embodied the principle that risk, when calculated correctly, becomes the very foundation of return. In the financial world, risk and return are two sides of the same coin. To earn more, one must be willing to risk more. But not all risks are created equal. Many traders and investors are lured by the prospect of fast profits and take impulsive decisions, often losing everything in the process. Kotegawa was different. He understood that every successful decision is a balance of courage and control. His trades were not based on emotion or luck. They were based on a deep understanding of probability, market behavior, and human psychology. By studying these factors carefully, he was able to determine when the potential reward justified the risk, and when it did not. One of the most valuable lessons from Kotegawa's life is that return cannot exist without risk, but risk without preparation leads to ruin. He approached trading as a process of learning and improvement rather than constant winning. Each risk he took was supported by knowledge and strategy. Even when he failed, he didn't see loss as defeat, but as data, something to analyze, understand, and use for better decisions in the future. This mindset kept him growing steadily while others around him fell. He treated every mistake as a stepping stone to mastery, proving that in both markets and life, risk and return are not fixed outcomes, but evolving relationships shaped by learning and experience. Kotegawa also understood the importance of patience in balancing risk and return. Many traders fall into the trap of overtrading, chasing every movement in the market out of fear of missing out. But Kotegawa's patience set him apart. He often waited for days, even weeks, for the right opportunity. He knew that risk-taking was not about constant activity, but about perfect timing. The best returns come to those who know when to act and when not to. His self-control and willingness to wait for the right moment exemplify how patience transforms risk from a gamble into a calculated decision. Beyond trading, Kotegawa's philosophy applies to life itself. Every goal, dream, or ambition carries a degree of uncertainty. Whether starting a business, pursuing education, or making personal choices, one must take risks. But Kotegawa's example shows that success depends not on avoiding risk, but on how one manages it. Preparation, research, and emotional discipline are what turn uncertain ventures into rewarding journeys. His life teaches us that risk is not the enemy of success. Fear is. The key is not to eliminate risk, but to face it intelligently, with a clear mind and strong principles. Kotegawa's story also highlights how discipline bridges the gap between risk and return. Without discipline, even the smartest strategies can collapse. It was his unwavering control over emotions, his ability to remain calm during losses and humble during wins, that ensured his long-term success. While others allowed excitement or despair to dictate their actions, Kotegawa relied on rational thought. This stability allowed him to take risks others feared, and to earn returns others only dreamed of. His story demonstrates that the highest form of intelligence in any high-risk field is emotional intelligence, the ability to stay balanced when circumstances are not. The relationship between risk and return in Kotegawa's life also reveals a deeper truth about human growth and resilience. Without risk, there can be no progress. Every significant achievement, financial, academic, or personal, requires stepping beyond comfort and facing uncertainty. Kotegawa's success was not just about money, it was about mindset. He dared to act when others hesitated, but he acted with precision. He faced losses and setbacks without losing confidence, and he kept refining his strategy until he reached mastery. His journey shows that the path to great returns, whether in wealth or wisdom, always involves courage, patience, and constant self-improvement. In the end, Takashi Kotegawa's story is more than just a tale of financial triumph. It is a lesson in balanced living. He proved that risk and return are not enemies but partners, one meaningless without the other. His methodical, disciplined approach to risk turned him from a modest trader into a symbol of calculated success. The real essence of his legacy lies not in how much he earned, but in how he earned it, through patience, knowledge, and emotional control. His life reminds us that every great opportunity carries uncertainty, and every challenge hides potential. To find success, we must learn to embrace risk, not blindly, but bravely. The balance between risk and return is the balance between fear and faith, between impulsiveness and wisdom. Takashi Kotegawa mastered that balance, and in doing so, he taught the world a timeless truth. Great returns are never the result of reckless action, but of calm, calculated courage. In conclusion, Takashi Kotegawa's story is not just about trading stocks or making millions. It is about mastering the balance between risk and return, between fear and courage, and between discipline and desire. From a small apartment in Tokyo with only 13,000 to his name, he rose to unimaginable success not through luck, but through patience, analysis, and self-control. His life reminds us that true achievement is not about how much you start with, but how wisely you use what you have. So, as we step into our own challenges and opportunities, let us remember Kotegawa's greatest lesson: fortune favors not the fearless, but the prepared. The difference between failure and success often lies in how we respond when risk knocks on our door. And so I leave you with this thought. When the market of life begins to shake and the crowd starts to panic, will you run with fear, or will you stand like Kotegawa, calm, courageous, and ready to turn risk into return?